We break down the trends shaping the world around us, bringing you the insights that matter most. Today, we're diving into one of the most revolutionary and disruptive topics in modern finance, Bitcoin. In just over a decade, this digital currency has evolved from a niche experiment born out of the 2008 financial crisis to a trillion-dollar asset class that's captivating investors, technologists, and even governments worldwide. Is Bitcoin just a fleeting trend fueled by speculation, or does it have the power to redefine the way we think about money, wealth, and economies? From its mysterious beginnings with the elusive Satoshi Nakamoto to its role in decentralized finance and global adoption, Bitcoin is rewriting the rules of finance. Stick around as we unravel its origins, explore the challenges it faces, and uncover its potential to reshape the global financial system. Before we dive in, here's a small request. If you enjoy content like this and want to stay informed about the trends shaping the future, hit that subscribe button and turn on notifications. It's a small gesture that helps us grow and ensures you never miss our latest insights. 1. Challenges faced by traditional financial systems. Inefficiency and costs. Traditional financial systems are often slow and costly, relying on centralized intermediaries like banks and payment processors that operate on outdated infrastructure. Think about the frustration of waiting days for an international payment to clear or watching transaction fees eat into your hard-earned money. Whether it's a business trying to maximize profits or a consumer making an online purchase, these inefficiencies and high fees are a burden on everyone involved. For instance, businesses can lose significant revenue to credit card fees, while consumers might face hefty charges for simple transfers. This inefficiency has fueled dissatisfaction and demand for faster, cheaper alternatives. Accessibility issues. Did you know that over 1.4 billion people worldwide remain unbanked? That's nearly 20% of the global population without access to basic financial services like savings accounts, loans, or even digital payments. Most of these individuals live in developing countries where banking infrastructure is either scarce or non-existent. Without access to financial tools, these individuals are effectively locked out of the global economy. They can't save securely, borrow money to start businesses, or send and receive funds easily. This exclusion creates a vicious cycle of poverty and economic stagnation in underprivileged communities. Inflation and currency devaluation. Inflation is a silent thief that erodes the value of your money over time. Central banks often print excessive amounts of money, reducing the purchasing power of fiat currencies. But in some cases, inflation spirals out of control. Take Venezuela and Zimbabwe as cautionary tales. In these countries, hyperinflation has rendered their currencies practically worthless. Families have had to carry stacks of cash to buy basic goods, and savings have been wiped out overnight. These extreme cases highlight the vulnerability of fiat currencies to poor monetary policies. Concentration of power. Centralization puts immense power into the hands of a few. Central banks, multinational financial institutions, and payment processing giants dominate the financial landscape. This concentration often leads to monopolistic practices and policies that benefit the elite rather than the average citizen. For example, during economic crises, bailouts are frequently directed toward major financial institutions while ordinary people bear the brunt of austerity measures. This dynamic fosters inequality and public distrust in traditional financial systems. Security risks. Hacking, fraud, and data breaches are rampant in traditional financial systems. Each year, millions of people fall victim to cyber attacks targeting banks, payment platforms, and credit card providers. When a major breach occurs, it doesn't just compromise individual accounts, it undermines trust in the entire financial system. Recent high-profile attacks have exposed sensitive financial data, leaving users vulnerable to identity theft and financial losses. For many, this has raised questions about the security of their money in traditional systems. 2. How Bitcoin and cryptocurrencies address these challenges. Decentralization and efficiency. Bitcoin operates on a revolutionary system called blockchain, a decentralized network where transactions are validated by a global web of computers instead of a central authority like a bank. This eliminates intermediaries, dramatically speeding up transactions and reducing costs. Imagine sending money across the world in minutes without worrying about hefty fees or delays caused by traditional banks. For example, Businesses using Bitcoin for international payments can save thousands of dollars annually in transaction fees. This efficiency is a game changer, making Bitcoin an attractive alternative to the outdated systems we rely on today. Global accessibility. Bitcoin doesn't discriminate, it's available to anyone with internet access. For the billions of unbanked individuals in developing countries, Bitcoin is more than just a digital currency, it's a lifeline. It allows them to save, send, and receive money without the need for a traditional bank account. In regions where banking systems are unreliable or even non-existent, Bitcoin provides stability. It offers a way to store value securely and transfer money across borders with ease, empowering individuals to participate in the global economy for the first time. Protection against inflation. One of Bitcoin's most compelling features is its scarcity. Unlike fiat currencies, which can be printed endlessly by central banks, Bitcoin's supply is capped at 21 million coins. This built-in limit ensures that Bitcoin remains immune to the inflationary pressures that erode the value of traditional money. Take countries like Venezuela or Argentina, where rampant inflation has decimated the value of national currencies. In these regions, Bitcoin is increasingly being used as a hedge to protect wealth. Its deflationary nature has earned it the nickname, digital gold, making it a safe haven for those looking to safeguard their purchasing power. Increased security. Security is one of Bitcoin's greatest strengths. Transactions on its blockchain are encrypted and irreversible, making them highly secure. This eliminates the risk of fraudulent chargebacks, a common issue with credit card payments. Additionally, because users control their own wallets, there's no need to trust third-party institutions to safeguard your money. Bitcoin's robust security protocols ensure that your finances remain in your hands, not at the mercy of a potentially vulnerable central system. Decentralized finance, DeFi. Bitcoin has paved the way for an entire ecosystem of decentralized finance, or DeFi. These platforms allow people to lend, borrow, and earn interest on their assets without involving banks or other centralized entities. DeFi platforms run on blockchain networks, ensuring transparency and accessibility. They offer higher returns on savings, lower borrowing costs, and the ability to participate in financial services without traditional gatekeepers. This democratization of finance is reshaping how people interact with money, creating new opportunities for those excluded from the conventional financial system. 3. Real-world impact of Bitcoin on economies. Case study: El Salvador, a bold experiment. El Salvador became the world's first nation to adopt Bitcoin as legal tender in 2021, a groundbreaking move that attracted global attention. The government rolled out Chivo Wallet, a state-backed digital wallet, enabling citizens to transact seamlessly in Bitcoin. This initiative directly addressed the issue of high remittance costs. Salvadorans abroad send billions of dollars home each year, and traditional transfer services like Western Union and MoneyGram take a hefty cut. By using Bitcoin, families save on fees, ensuring more of their hard-earned money reaches their loved ones. Did you know? The Chivo wallet also incentivized early adoption by offering users $30 worth of Bitcoin upon registration, spurring rapid growth in Bitcoin transactions across the nation. Corporate adoption, building mainstream trust. Major corporations have embraced Bitcoin, signaling a seismic shift in the financial landscape. 1. Tesla holds Bitcoin on its balance sheet, reflecting its confidence in the cryptocurrency as a store of value. 2. Square, now Block, and MicroStrategy have invested billions in Bitcoin, with MicroStrategy CEO Michael Saylor becoming a prominent advocate. 3. Retailers like Overstock and platforms like PayPal now accept Bitcoin, making it more accessible for everyday transactions. This trend not only validates Bitcoin's utility but also pushes it closer to mainstream adoption. Cross-border remittances, empowering families worldwide. Bitcoin is revolutionizing how families send money across borders. Traditional remittance channels often charge fees as high as 7–10% of the transferred amount and take days to process. In contrast, Bitcoin enables 1. Instant transfers. Money arrives within minutes, regardless of the sender's or recipient's location. 2. Minimal fees. A fraction of the cost compared to traditional services, saving families significant amounts annually. For millions in developing countries, this means more affordable ways to support their loved ones abroad. emerging economies, financial independence and resilience. In nations with fragile economies, Bitcoin offers a lifeline. Countries like Nigeria, Venezuela, and Argentina face rampant inflation and unstable currencies. Bitcoin allows citizens to 1. Preserve wealth by storing value in a deflationary asset immune to local currency devaluation. 2. Transact globally without relying on unreliable banking infrastructure. For instance, in Nigeria, Bitcoin trading volumes soared as citizens sought an alternative to the faltering naira, showcasing its potential to empower individuals in dire financial conditions. Hedge against economic uncertainty. In developed economies, Bitcoin is gaining traction as a hedge against inflation and market volatility. Unlike traditional assets like stocks or bonds, Bitcoin is 1. Decentralized, not tied to the performance of a single economy or company. 2. Scarce. Its fixed supply of 21 million coins makes it immune to inflationary pressures. As institutional investors look for ways to diversify portfolios, Bitcoin has emerged as a digital alternative to gold. Job creation and innovation, a thriving ecosystem. The Bitcoin industry has spurred the creation of thousands of jobs globally. 1. Mining operations, generating employment in technology and energy sectors. 2. Blockchain development, opening opportunities for skilled developers and engineers. 3. Cryptocurrency exchanges, facilitating the growth of financial services tailored to digital assets. This wave of innovation is transforming the financial and technological landscape, driving advancements in renewable energy for mining and fostering new financial technologies. 4. Expert insights and future outlook. Expert opinions, visionaries on Bitcoin's potential. Economists and thought leaders have painted a compelling vision for Bitcoin's future. 1. Seyfuddin Amis, author of the Bitcoin Standard, argues that Bitcoin could anchor a more stable global monetary system. 1. By limiting the power of central banks to inflate currency supply, Bitcoin has the potential to restore financial discipline and fairness. 2. Renowned investors like Paul Tudor Jones and Cathie Wood view Bitcoin as a hedge against inflation and a revolutionary asset class that could outperform traditional investments. These perspectives highlight Bitcoin's potential to redefine how economies function, sparking interest among policymakers and financial institutions alike. Challenges that Bitcoin must overcome. While the potential is vast, Bitcoin faces critical challenges. 1. Energy consumption. Bitcoin mining has been criticized for its environmental impact, as it requires significant electricity. 1. However, initiatives like mining with renewable energy and utilizing excess power are already mitigating this issue. 2. Scalability. The Bitcoin network can only handle a limited number of transactions per second, making it less practical for mass adoption. 2. Solutions like the Lightning Network are addressing this by enabling faster and cheaper off-chain transactions. 3. Volatility. Wild price swings make Bitcoin less reliable as a medium of exchange. 3. Greater adoption and regulatory clarity could help stabilize its value over time. These hurdles are significant but not insurmountable, with ongoing innovation providing pathways to overcome them. The role of governments and regulation. Governments worldwide hold the key to Bitcoin's future trajectory. 1. Pro-adoption examples. El Salvador's embrace of Bitcoin as legal tender demonstrates how governments can leverage it for economic benefits, such as lowering remittance costs and attracting investment. 2. Restrictive approaches. Countries like China have banned Bitcoin mining and trading, citing risks to financial stability and energy concerns. The regulatory landscape is evolving rapidly. Clear and balanced regulations could pave the way for widespread adoption, while overly restrictive policies might push innovation into more welcoming jurisdictions. Potential for global financial transformation. Bitcoin's impact could ripple far beyond personal finance. 1. Cross-border transactions. By enabling trustless, instant payments without intermediaries, Bitcoin could revolutionize international trade and reduce dependency on costly banking networks. 2. Challenging the US dollar. Bitcoin has the potential to serve as an alternative reserve currency, reducing reliance on the US dollar in global trade and finance. 3. Democratizing finance. Bitcoin breaks down barriers, granting individuals worldwide access to a decentralized financial system without the need for traditional banking infrastructure. As Bitcoin matures, its role in reshaping global finance will likely grow, driven by innovation, institutional adoption, and increasing public trust. 5. Broader implications for the global economy. Disruption of traditional banking systems. If Bitcoin and cryptocurrencies achieve mass adoption, traditional banks may face existential challenges. Their role as intermediaries in financial transactions could diminish, as individuals and businesses rely more on decentralized solutions. This could force banks to innovate or risk becoming obsolete in the evolving financial ecosystem. Shift in global power dynamics. Bitcoin's rise could alter the balance of power in global finance. Currently, the US dollar dominates as the global reserve currency, giving the United States significant influence over international trade and monetary policy. Bitcoin, as a decentralized and borderless currency, could challenge this dominance by providing an alternative that is not controlled by any single country or institution. Economic empowerment of developing nations. For developing nations, Bitcoin presents a unique opportunity to leapfrog traditional financial systems. By adopting Bitcoin, these countries can bypass the costly infrastructure associated with traditional banking and enable their populations to access financial services directly through smartphones. This could lead to greater economic growth and stability in regions that have historically been underserved. Environmental and energy considerations. Bitcoin mining, the process of validating transactions and creating new coins, consumes substantial amounts of energy. Critics argue that this contributes to environmental degradation. However, proponents point out that mining operations are increasingly adopting renewable energy sources, with some even utilizing excess energy that would otherwise go to waste. The debate over Bitcoin's environmental impact remains a critical area of discussion. Innovation in blockchain technology. Bitcoin has sparked a wave of innovation in blockchain technology. Beyond finance, blockchain applications are emerging in industries like healthcare, supply chain management, and voting systems. These innovations have the potential to create more transparent, efficient, and secure systems across various sectors. 6. Challenges and controversies surrounding Bitcoin. Volatility and speculation. One of Bitcoin's most criticized aspects is its price volatility. While this attracts speculative investors, it also makes Bitcoin less practical as a stable medium of exchange. Businesses may be hesitant to accept Bitcoin for payments if its value fluctuates dramatically within a short time frame. Regulatory uncertainty. Governments around the world are divided in their approach to Bitcoin. Some see it as a financial innovation, while others view it as a threat to their monetary systems. Regulatory crackdowns, such as China's ban on Bitcoin mining and trading, highlight the challenges Bitcoin faces in gaining widespread acceptance. Illicit activities and misuse. Bitcoin's pseudonymous nature has made it a preferred medium for illegal activities, including money laundering, tax evasion, and ransomware attacks. While its blockchain is transparent and traceable, the association with illicit use has tarnished its reputation in some circles. Competition from central bank digital currencies, CBDCs. Governments are exploring their own digital currencies, known as CBDCs, to modernize payment systems and counter the rise of cryptocurrencies. Unlike Bitcoin, CBDCs would be centrally controlled, giving governments the ability to maintain oversight. However, this could reduce Bitcoin's appeal as a decentralized alternative. 7. The path forward. Is Bitcoin the future? Adoption and scalability. For Bitcoin to fulfill its potential, it must overcome scalability issues. Solutions like Lightning Network aim to enable faster and cheaper transactions, making Bitcoin more viable for everyday use. The adoption of these technologies will be key to Bitcoin's success. Public awareness and education. Widespread adoption of Bitcoin requires improved public understanding of how it works and its benefits. Many people are still hesitant to embrace cryptocurrencies due to a lack of knowledge or misconceptions. Increased efforts to educate the public could accelerate adoption. Integration with traditional systems. Rather than replacing traditional financial systems entirely, Bitcoin may integrate with them to create a hybrid model. Banks and payment processors are beginning to offer cryptocurrency services, signaling a potential convergence of old and new systems. Long-term impact on wealth distribution. Bitcoin has the potential to democratize wealth by giving individuals greater control over their financial resources. However, critics argue that early adopters and large holders of Bitcoin, known as whales, could consolidate wealth, perpetuating existing inequalities. The long-term impact on wealth distribution remains uncertain. The Bitcoin experiment continues. Ultimately, Bitcoin's role in the global economy is still evolving. Its journey from an obscure digital experiment to a trillion-dollar asset demonstrates its resilience and potential. Whether it becomes the foundation of a new financial era or remains a niche investment, Bitcoin's impact on the world is undeniable. Bitcoin is no longer just an idea, it's a movement. From addressing inefficiencies in traditional systems to empowering the unbanked, its potential impact on the global economy is enormous. The debate is far from settled, but one thing is clear: Bitcoin has started a financial revolution, and we're all part of it. Now, it's your turn. What's your take on Bitcoin? Is it the future of finance or just a passing trend? Let us know in the comments. If you enjoyed this video, give it a thumbs up and share it with anyone curious about cryptocurrency. And don't forget to subscribe for more deep dives into the trends shaping our world. Thanks for watching, and see you in the next one.